This video is for more sophisticated retirees who already have a good understanding of how they will manage their savings investments going forward. If you will be just relying on keeping savings in a super fund, it is better to stick with using the investment earnings average percentage approach. This is why the discussion around use phased investment earnings plan field on the summary tab is not included in the summary tab, how to use video. The phased investment earnings tab allows you to plan different returns for different years of your plan. You might use this if, for example, you have an SMSF and want to keep your savings in safer cash type assets while the uncertainty in the stock market outlook remains, as it does in 2025. Once resolved, you may then plan to move to different assets such as share portfolios or simply move everything into a super fund. Pretty clearly, each has its own potential earnings return. If we open the tab, the earnings rate highlighted in blue can be adjusted for each year. It defaults to the investment earnings average percentage on the summary tab. You can then manipulate each year's rate as felt appropriate. In this example, we have decided to forecast holding savings in a mix of mortgage funds and cash funds, resulting in a lower return in exchange for minimal risk. After 3 years, we have expected the stock market to have resolved and will then return to the original strategy of closing down the SSF and moving funds into the Australian Super Choice account, anticipating a lower average return than the 30-year average. If we then go back to the summary tab and adjust the phased investment earnings flag to yes, you can see it updates the forward estimate of balances downward to account for lower returns in earlier years. This demonstrates how you can continue to use the planner going forward to make decisions on where to place your savings, knowing exactly what impact it will have on your plan.